Hi traders, hope you're all doing well. In this video, we will take a look at the final 2 trading days of last week, where we saw some interesting moves that would be useful, especially for the inexperienced traders out there, to keep in mind for future reference. Up on the screen here, we have an H1 chart focusing on the 4th of July and the following day. The 4th of July is, of course, a US federal holiday, and hence we had thinner trading volume on that day. Inexperienced traders are probably best served not to trade during thinner volume for 2 reasons. Firstly, thin volume translates into flat price action, and therefore any day trade position that's opened in this situation might not hit your target until the following day, and you'll feel like you're watching paint dry. Secondly, thin volume can lead to exaggerated moves, and if you're on the wrong side of an exaggerated move, you're likely to get taken out. On the 4th of July, as expected, we saw flat price action throughout the day, with no exaggerated moves to speak of other than a relatively weak spike down from this ranging action and consolidation zone to retest the 2350 area, which was quickly rejected. On Friday, the market was always going to make a manipulation play ahead of that day's NFP release, especially given the following context. Typically, when you get a US national holiday the day before a major economic data release, returning traders, especially the inexperienced ones, tend to enter the market more aggressively and impatiently, and the market manipulators were banking on that to make their play. There is an important maxim in trading that states the market is a place where money is exchanged between impatient traders and patient traders. Our shared NFP plan for GoldViewFX's VIP members was to buy in the event of a manipulated takedown of price to one of our key support levels and bank at 2389. The 2350 area was our first targeted strategic dip to go long, as this was one of our key levels for the start of that trading week, and Thursday's retest meant that there would be another reaction at that level if price went there again. On the Friday, you can see that initially there was flat price action for a short period after market open, but price then broke out of the consolidation zone to start trending higher. That was the fake early breakout to the upside, luring traders in with longs. A lot of retail traders got caught in this move up by going long at the top of the uptrend ahead of the NFP release. On the NFP release, the price was instantly whacked down to just below the 2350 area, taking out the stops, thank you very much, before price was swiftly taken back up and placed in the uptown lane to go on and hit our target near the end of the day. Retail traders who were long and overexposed before the NFP release and had their stops taken out by the neckbreaker whipsaw spike down should not have been in that trade in the first place. If you're not experienced, it's not a wise idea to trade NFP unless you've got your risk management on point or have the strength and depth to set a wider stop loss. This kind of stop out is one of the worst from a psychological point of view. You may think that any kind of loss is equally damaging psychologically, but no. This is the kind of stop out that has more of an adverse psychological impact with regard to stifling the trader's ability to continue trading effectively after the loss, because they will have seen their position stopped out before price reversed sharply to go on and hit their original target and beyond. Here at GoldViewFX, something we always remind members is the importance of being patient with regard to identifying setups that line up exactly with our strategy. Head over to our Telegram channel to discover how we are successfully trading this bull run, even during manipulation plays, as well as taking a look at our profit balance for the 2 days analyzed in this video. Thanks for watching, and please don't forget to subscribe.